Hey, this is Max. Welcome to the Max Dividends channel, where we help people build growing passive income, retire early, and live off dividends. In every video, I break down one stock in detail, from business model to financial metrics, so you can make informed investment decisions. If this sounds interesting, definitely subscribe to the channel. There are many exciting analyses ahead. When it comes to quietly reliable businesses that just keep winning, few beat Tractor Supply. This isn't flashy tech or headline-grabbing innovation. It's a compounding machine built around small-town America, serving farmers, ranchers, and homeowners who keep the country running. With over 2,200 stores across 49 states, 15-plus years of unbroken dividend growth, and a financial score of 99, Tractor Supply proves the power of simple, essential business models. In this deep dive, I'll put TSCO through the secret Max Dividends 5-pillar formula. The same simple checklist I use to identify enterprises capable of growing sales, protecting profits, maintaining strong balance sheets, and raising dividends decade after decade. Today we will find out how this company makes money. Is this a good stock to buy long-term? We'll use the Max Dividends strategy checklist and the 5-pillar secret formula. The company financial condition. Is the stock undervalued today? How this company makes money? Let's start with the foundation. Do I clearly understand how Tractor Supply generates revenue? TSCO makes money the old-fashioned way, by selling the things rural America needs every single day. From livestock feed to tools, fencing, boots, and pet supplies, it's the go-to store for farmers, ranchers, and homeowners across the country. The business runs on 3 simple but powerful pillars. First, core retail stores, over 2,200 locations in 49 states, serving rural and suburban communities. The products are essential: feed, fencing, tools, workwear, and outdoor equipment. These aren't luxury items, they're the everyday necessities that keep small farms and homesteads running. Second, e-commerce and omni-channel. Tractor Supply has quietly become a digital success story, with over 25% of sales now touched by online activity. The buy online, pick-up in-store model works perfectly for their customer base. Practical, efficient, and personal. Third, Neighbors Club loyalty program. With 30+ million members, it's the heart of the brand's customer retention strategy. Repeat purchases, exclusive offers, and personalized deals keep loyal customers coming back month after month. The company's strength lies in recurring demand. Animals need feed, tools wear out, and rural life doesn't pause for recessions. Whether the economy is booming or slowing, TSCO stays relevant because it serves the real, everyday needs of its customers. That combination of essential products, repeat customers, and nationwide reach makes Tractor Supply a durable, steady cash flow machine built for the long haul. Max Dividends approach in action. Our philosophy is simple. We stick with solid, sustainable enterprises that raise dividends year after year. The longer you own such stocks, the more passive income accumulates, steadily, predictably, and without the need for active management. Step 1. Dividend history. Our basic filter: companies with more than 15 years of continuous dividend growth history. Tractor Supply checks this box perfectly. The company began paying dividends in 2010, and every single year brought a raise. From just a few cents per share in 2010 to nearly $1 per quarter by 2024, TSCO's dividend growth has been relentless. Over that 15-year span, payouts have grown more than 10x, making it one of the strongest performers in the entire retail sector. The most recent increase came in 2025, when the board approved another 4.5% raise. The company's 5-year dividend growth rate sits around 28% per year, showing not just consistency, but speed. Few retailers in America have managed to deliver both strong earnings expansion and double-digit dividend hikes like this. Step 1 passed. Tractor Supply is a proven Dividend Eagle with a flawless 15-year growth streak, disciplined payout policy, and management fully committed to rewarding long-term shareholders. Step 2. Secret 5-pillar formula: sales growth. Foundation of strong business. Over the last decade, Tractor Supply has more than doubled its revenue, growing from around $7.8 billion in 2015 to roughly $15.5 billion in 2024, a clear sign of durable compounding demand. The company's steady climb comes from 3 growth engines: consistent same-store sales gains as people keep coming back for essentials, store expansion with now over 2,200 locations across 49 states, and digital growth where online orders now make up over 25% of total revenue. Sales growth passed. Demand for everyday rural essentials, loyal customers, and nationwide store expansion keep revenue rising year after year. Profit growth. Fuel for dividend growth. Profits at Tractor Supply have expanded right alongside sales, showing the strength and discipline of its operations. From about $2.1 billion in 2015 to nearly $5.8 billion in 2024, operating profit has more than doubled, powered by steady store growth, strong pricing discipline, and the ability to pass on inflation costs without losing customers. Margins have remained solid thanks to the company's focus on private label brands, efficient logistics, and a loyal base of repeat customers who value reliability over price chasing. Even during volatile periods, supply chain shocks, cost inflation, or interest rate hikes, Tractor Supply maintained profitability and kept its cash engine running smoothly. Profit growth passed. Consistent double-digit earnings expansion driven by scale, pricing power, and loyal repeat customers keeps profits compounding year after year. Net income, true measure of strength. Tractor Supply's bottom line tells a story of consistency and discipline. Over the past decade, net income has risen from around $410 million in 2015 to roughly $1.2 billion in 2030, reflecting the company's ability to grow profitably year after year. Even through inflation spikes, rising labor costs, and supply chain challenges, TSCO continued to post record earnings, proof of strong customer loyalty, and an efficient operating model that holds up in all market conditions. Net income passed. Tractor Supply's consistent, growing profits highlight a resilient business model and dependable cash generation that dividend investors can count on. Dividend payout safety, protecting passive income. Tractor Supply takes a disciplined approach to dividend payouts, balancing generosity to shareholders with plenty of room to reinvest in growth. The company's TTM payout ratio sits around 40%, with a 10-year average close to 30%, a very comfortable level for a mature yet still expanding retailer. The payout ratio has gradually increased over the years, but always within a safe range. This shows management's confidence in future cash flow while maintaining a cushion against slowdowns or unexpected costs. Dividend payout safety passed. Balanced and sustainable payout policy, with plenty of room to grow while keeping dividends fully protected by steady, durable cash flows. Debt burden, avoiding financial traps. Tractor Supply maintains a balanced and disciplined approach to debt. Over the last decade, its debt ratio has stayed between 0.4 and 0.8, reflecting a healthy balance between growth financing and financial stability. While the company has gradually taken on more leverage to support expansion, share buybacks, and capital investments, its cash flow easily covers all obligations, keeping the balance sheet in strong shape. This is exactly what we like to see: moderate, well-managed debt that supports growth without putting dividends or operations at risk. Debt burden passed. Leverage remains controlled, backed by strong free cash flow and prudent capital management. Tractor Supply runs a tight, disciplined balance sheet with no financial red flags. Company's financial condition. According to our evaluation system, Tractor Supply receives a financial score of 99 out of 100 possible points, the highest assessment for long-term investments. Such a score signals that the company is fundamentally sound and designed for long-term perspective. According to the secret Max Dividend's 5-pillar formula, TSCO is classified as a proven Dividend Eagle: consistent sales growth, rising profits, safe payout ratio, and prudent debt management. It passes every test with confidence. Does it fit my plan? With a max ratio of 13.63, dividend yield of 1.63%, and 5-year dividend growth rate of 224%, Tractor Supply lands firmly in the Income Eagles category. While the yield might look modest at first glance, the speed of dividend growth and the company's rock-solid fundamentals put it among the most shareholder-friendly names in U.S. retail. In plain terms, TSCO doesn't just pay dividends, it grows them fast. A top-tier dividend grower with the financial strength and consistency to keep rewarding shareholders for years to come. Is the stock undervalued today? By all our key metrics, here's where TSCO stands: cheaper than competitors. According to the Max Dividends app, Tractor Supply currently appears overvalued compared to its peers, meaning investors today are paying a slight premium relative to similar companies in the retail sector. Cheaper than its own history. Over the past decade, TSCO has typically traded at a PE ratio around 23.8. Today it stands near 27.2, which means the stock is priced above its long-term average valuation. Better yield than usual. Today, Tractor Supply offers a dividend yield of 1.63%, compared to its 10-year average of 0.51%. That means the current yield is more than 3 times higher than what investors have typically received over the past decade. A noticeably more favorable entry point for long-term dividend growth investors. Analysts' consensus: TSCO currently trades around 55,049 per share, while the average analyst price target stands near $62, implying roughly 12% upside from current levels. Final decision, Tractor Supply is a fantastic example of the type of business we seek at Max Dividends. Proven dividend growth, rock-solid fundamentals, and a business model built on essential recurring demand. With 15 consecutive years of dividend increases, a financial score of 99 and over 2,200 stores serving rural America, this company checks all the right boxes. However, the current valuation sits above both peer averages and its own historical range. While the dividend yield of 1.63% is significantly better than the 10-year average of 0.51%, the premium PE ratio suggests waiting for a more attractive entry point. I've actually owned shares before, buying around $48 per share, and I'd be happy to invest again when conditions look right. For now, I'm keeping it on my watch list, waiting for the market to offer that opportunity. But make no mistake, this is a company I like, respect, and fully trust to handle a portion of my long-term savings. The same methodology I applied to Tractor Supply works for any stock, and the best part, everything is already integrated into the Max Dividends app. Financial ratings, max ratio, lists of top dividend eagles, and my personal watch list. If this analysis was helpful, support with a like and subscribe to Max Dividends. Remember, this is not investment advice. See you in the next analysis.